The year was 1994, and the internet was no longer a secret whispered about in research labs and university hallways. It had broken out into the open, raw, and full of promise. A vast frontier that promised to change everything. In homes across America, the sound of a modem connecting, a series of beeps, hisses, and static bursts, was becoming the soundtrack of a new age. Back then, the web was slow, clunky, and visually barren. Pages loaded line by line, and images could take minutes to appear. Yet the possibilities seemed limitless. For the first time in history, anyone could publish, connect, and trade on a global stage. The digital gold rush had begun, and like the gold rushes of centuries past, it wasn't just about technology, it was about dreams. In the mid-1990s, venture capitalists, tech enthusiasts, and a growing army of ambitious 20-somethings began pouring into Silicon Valley. The new currency of success was not gold or oil, but eyeballs, the number of visitors your website could attract. A catchy name, a half-decent business plan, and the all-important .com at the end were enough to open the floodgates of investment. In boardrooms, the question wasn't whether a company could make a profit, it was how quickly it could grow before someone else took its place. The first wave of .com companies promised to revolutionize everything from grocery shopping to pet care. Amazon began by selling books online, a concept many thought was absurd. Why buy a book you couldn't flip through before purchasing? Jeff Bezos ignored the skeptics, convinced that the internet could do what traditional bookstores couldn't, offer an endless catalog, delivered straight to your door. Meanwhile, other startups chased niches big and small. eToys promised to dominate the toy market online. Pets.com became a household name thanks to a sock puppet mascot and relentless advertising. Webvan sought to replace the weekly trip to the grocery store with home delivery. It didn't matter if the technology was ready or the market was mature, what mattered was being first. Investors fueled the frenzy. Money poured into companies that had yet to turn a profit, and in many cases, had yet to make a single sale. The Nasdaq stock index became a roller coaster of record highs, driven by a belief that the internet was rewriting the rules of business. The old economy, with its balance sheets and cautious growth, was seen as outdated. This was the new economy, and in the new economy, speed was everything. With capital flowing like water, startups spent lavishly. Office spaces were filled with beanbag chairs, arcade machines, and endless free snacks. Ping-pong tables stood beside cubicles. Company parties featured big-name bands, and lavish launch events were the norm. For many, working at a .com wasn't just a job. It was a lifestyle, one built on caffeine, ambition, and the belief that they were changing the world. But beneath the surface, cracks were forming. Many .com businesses relied on the same flawed equation: spend heavily to attract users, then figure out how to make money later. Shipping dog food across the country for less than it cost to send it wasn't a business model, it was a marketing stunt. And while website traffic was easy to measure, profitability was not. By 1999, the mania had reached fever pitch. The mere announcement of an upcoming IPO, initial public offering, could send a startup's valuation into the billions overnight. Some companies doubled or tripled in value on their first day of trading. It seemed like a perpetual motion machine of wealth creation. But history has a way of reminding us that bubbles always burst. The turning point came in early 2000. Interest rates rose. Investors began to question the logic of funding companies with no profits and no clear path to sustainability. Stock prices wobbled, then fell. The Nasdaq, once soaring toward the heavens, plummeted. Within months, billions in paper wealth evaporated. Startups that had been darlings of the press were shutting down almost overnight. Webvan, eToys, and Pets.com became cautionary tales of ambition unmoored from reality. The human cost was real. Thousands of employees lost their jobs. Office furniture from failed .coms was auctioned off for pennies. The once bustling corridors of Silicon Valley were littered with abandoned dreams. For a moment, it seemed as if the internet revolution had been overhyped, a passing fad whose time had come and gone. Yet, in the wreckage, something remarkable emerged. The infrastructure built during the boom years, the data centers, the broadband connections, the growing comfort with online transactions, remained. Amazon, having weathered the storm, continued to expand. Google, which had launched quietly in 1998, emerged from the shadows with a search engine that was faster and more accurate than anything before it. eBay, which had started as a hobby project, became a cornerstone of online commerce. The lessons of the dot-com crash reshaped the tech industry. Investors became more cautious, demanding clearer business models and measurable profitability. Entrepreneurs learned that while growth was important, sustainability was essential. The era of chasing eyeballs gave way to an era of building trust, loyalty, and long-term value. In hindsight, the dot-com boom was not a failure. It was a necessary phase in the evolution of the internet. It tested ideas at lightning speed, discarding the unworkable and refining the viable. It trained a generation of technologists, marketers, and engineers who would go on to build the social networks, apps, and platforms we use today. And perhaps most importantly, it proved that the internet was not just a novelty, it was a fundamental shift in how humans communicate, trade, and create. The dreamers of the 1990s may not have built the world exactly as they imagined it, but they laid the foundations for the one we live in now. Today, as we navigate our own tech-driven booms and busts, cryptocurrency, artificial intelligence, the metaverse, it's worth remembering the dot-com years. They remind us that innovation always carries risk, that hype can both inspire and mislead, and that even in failure, seeds of the future are sown. The internet didn't end with the crash of 2000. In many ways, it was just beginning. The tools, networks, and culture that emerged from that wild decade set the stage for the digital age that followed. And for all its excesses and missteps, the dot-com boom remains a story not just of speculation, but of vision. A vision bold enough to believe that a string of characters ending in .com could change the world.